Good morning, everyone. Hopefully you can all hear me. Thank you for all joining. Just going to give it another 30 seconds or so to ensure that we've got as many people on that need to be on. It's good to see some familiar names on here as well. So welcome to you all. Thanks again for joining us. Just going to give it another final couple of seconds and I'll get started. Okay, let's kick off today's clinic. So first and foremost, thank you for joining us. This is number 3 of 4. For those that have joined us for previous clinics, we had Patrick Lease, one of our underwriters, and a fantastic opportunity for advisors to speak directly with one of our underwriters to discuss all things standard life and finance and what we do with your customers' applications. Last week, we had a guest speaker, Philip Calvert, and he was sort of supporting the advisors that were able to join us with lead generation opportunities, which went down really well. Today, as you're all aware, excuse me, we're talking about something really topical in our industry and as far as the regulator is concerned, which is with respect to vulnerable customers and how we can identify them. And then just to finish off next week, we have one of our business development managers, Isaac Allen, who will be running our final clinic of this particular series, talking about repayments and the impact it can have on your customers' considerations for lifetime mortgages. For those of you that don't know me, my name is Sanjay Gadhia. I am head of sales at Standard Life Home Finance. I'm just going to start sharing some slides for you to discuss today's content. Right, so hopefully you can see the first slide here. And as I mentioned earlier, the theme of today's clinic is to support identifying and supporting vulnerable clients. So I just really want to start off with, what do we define as a vulnerable customer or client? And start off with really the FCA's definition, which we appreciate and respect is very broad. But in terms of the FCA's definition of a vulnerable customer, it is someone who, due to their personal circumstances, is especially susceptible to harm, particularly when a firm is not acting with appropriate levels of care. And as I mentioned, it is deemed as being intentionally broad, and it refers to individuals who either are or may be in vulnerable circumstances. Being in vulnerable circumstances which also could either affect their ability to manage their financial affairs, and or they could be adversely impacted or worsened by our actions, our products and services. So, as I mentioned earlier on, we are acutely aware that this is in fact a very topical subject and one that we wanted to bring to the forefront to support our advisors. And I hope that during this presentation, we will equip you with some knowledge and tools to support you continue to ensure that you are supporting and identifying any customers who may be in vulnerable circumstances. So if I look at the 4 categories, again, these have been identified by the FCA, and I'll be expanding on these very shortly. But they believe that there are 4 categories that customers may be deemed as vulnerable based on their on what drivers that might be able to be identified by you as their advisor during the advice process. So first and foremost, health, and actually take this into full consideration based on the demographics that we deal with our later life solutions. So these are sort of expanded upon with respect to any potential health conditions or illnesses that might impact them with their day-to-day living. Life events as well, which I will go on to in a short moment. Resilience. This is really the customer's ability to be able to withstand any financial or emotional circumstances that may be impacting them during their later life. And lastly, we'll be talking about capability. Really, this is customers who may have a low knowledge of financial matters or potentially have low confidence when it comes to managing their finances. So I just really want to finish off here very quickly. There was a customer that was identified with ourselves, recently lost her job. She was struggling with depression. Her financial situation had become precarious, and she was considering a lifetime mortgage to manage her expenses. And it was crucial for the advisor in this particular instance who flagged this customer's vulnerability and provided her with necessary support and guidance. Now, someone losing their job, particularly as I mentioned, when we're dealing with customers that are at least of age 55, in this scenario, this customer's working in employment for at least 30 years. So what the advisor was able to do was identify the fact that the repercussions of the life event being a job loss led to her actually having a health condition, and by supporting with soft, open questions to ensure that they were understanding that client's circumstances during the fact-finding process, this was identified and as such flagged to us as the lender. It's very important that if you do identify any form of customer vulnerability, that you do ensure that your lender is informed. For ourselves here at Standard Life and Finance, we have vulnerable customer champions dotted across every department that supports you and your customers throughout the application process. We also have system enhancements in place to ensure that at any point, should any of my colleagues or myself have a touch point on that lifetime mortgage application, we'll be able to instantly be informed that there is some form of vulnerability. So if I kind of expand upon the characteristics that the FCA have provided us by way of a guideline. And I guess the first thing I really want to bring to the forefront is not all customers displaying these characteristics will necessarily be vulnerable. And I'll just expand upon this in a moment, but I guess if we look at the first category being deemed as health. Now, taking into consideration, as I'm aware that there are very differing advice models throughout our industry. You know, I'm aware of advisors that go out and do face-to-face appointments as standard, some that run on a complete remote basis, and some that run on, as I call, a mix or a hybrid, whereby they might do some initial advice remotely and then go out and see the customer. Now, dependent on your individual advice process, you really need to put some thought process into how will your advice model need to be adapted to ensure that you are asking the right information from your customer to support identifying any points of vulnerability. Furthermore, I want to go back to the fact that not all of the characteristics that have been outlined necessarily mean that the customers are vulnerable. But by probing the customer, you'll be able to give yourself comfort as to whether or not you personally believe there is some form of vulnerability kind of characteristics being displayed. And overarching all of this, it is subjective, and we are aware of this. But it's important for us to all across the industry to communicate with one another and ensure that we are ultimately supporting that end customer. So for health, I respect and appreciate that a physical disability, particularly when you have a face-to-face advice model, could be identified extremely quickly. But it's these other ones that might not be as apparent, again, dependent on either advice model that you may be running. To those that may have severe or long-term illness, those that may have some form of mental disability as opposed to physical, and those that may have a low mental capacity or cognitive disability. Now, I appreciate, you may have seen I've deliberately missed out the hearing or vision impairment, but customers are very forthcoming with informing anyone that they're communicating with should they have some form of hearing or vision impairment. And I'm sure you already have processes built into your advice process to support these customers. I know as us for Standard Life and Finance, our literature is available in large print or can be provided in Braille, should it be required for your end customer. And I guess when you're looking at illnesses, for example, this industry has expanded its proposition across the years. And, you know, there are a few lenders in our space operating where they are potentially able to offer your customer a higher LTV or a lower interest rate or a combination of both, should that customer have some form of medical condition. And looking at some of the names that have thankfully joined us today on our webinar, I am very aware that you are already asking the questions with respect to any form of medical conditions. Life events is one I really want to come to, and I ran this session previously for a network, and what I really want to bring to the forefront is a relationship breakdown. And I want to loop back to what I mentioned earlier, that identifying or deeming a customer as vulnerable is subjective, but one can argue, is a relationship breakdown a characteristic that would deem a customer as vulnerable? Now, just below that on this table that you can see in front of you is domestic abuse and or including some form of economic control. Therefore, should there be some form of relationship breakdown and you're supporting a customer that may be separating or going through a divorce from their partner, for example, arguably, is that a vulnerable customer, or is that a customer that is actually relieved and they're actually moving forward to a more positive outlook and a positive future? So again, ensuring that you have those soft opening questions, showing empathy to those customers when you're discussing with them the lifetime mortgage application, the requirements of the end customer, including the pros and cons, that you support understanding yourself whether or not that customer is deemed as vulnerable. Other ones in life events, for example, is retirement. On a personal note here, my father retired a few years ago, and in fact, he wasn't vulnerable. I guess he did have a short period of time when he was sitting around wondering what he should be doing, given the fact that he probably had a career spanning over 40 years in the working world, but in fact gave him a lease of life. And if anything, he went out and started to enjoy his retirement more so. So potentially those that are in retirement may flag some characteristics of vulnerability, but it doesn't necessarily deem that customer as being vulnerable. We talk about resilience here as well. So I know through the evolution of lifetime mortgages, the first one here talks about inadequate or erratic income, outgoings exceeding their income, for example. Now, the evolution of lifetime mortgage solutions, and I bring to the forefront those that have mandatory or committed payments, that we're seeing more and more advice models embracing and ensuring that they're doing a full fact find, including income and expenditure, as part of their advice process. Now, through that income and expenditure analysis that you'll be doing as part of your fact find, it's absolutely worth ensuring that you are reviewing the bank statements, and you should be able to identify there whether or not there is any form of potential vulnerability based on what the transactions are showing. And lastly, it's with respect to capability. And again, this is really born from looking at customers that may not have the capacity to be able to understand what is going on through the lifetime mortgage process. It deems potential poor English language skills, an interpreter or a family member or a friend can support in that instance. But again, just ensuring that you are being aware of potential characteristics, and crucially ensuring that you are recording these and using the customer's language when you are doing the fact find. Please ensure, as I mentioned, the last thing is ensure to remember to take notes and write down in the customer's language to show evidence around how we are identifying and supporting our vulnerable customers. And just in addition to this, our compliance director recently gave us an update in terms of the regulatory landscape. And what we have been informed is that the FCA are reviewing vulnerability and vulnerable customers, not just necessarily within our industry, but across financial services. So just thought I'd bring that to your attention too. So ultimately, how can we support identifying vulnerable customers? As I mentioned, and I will do continuously here, understanding vulnerability absolutely is nuanced. Anyone can become vulnerable at any time. Again, I'll track back to a personal experience of mine semi-recently. It was last month. I was presenting in front of a network, and the principal has advised us that we weren't to use PowerPoint. They did not want a death by PowerPoint conference or meeting, and that's absolutely respected. But in that moment in time, given the fact that I kind of live off of working off of presentations. I was delivering a session on vulnerable customers, and at that moment in time, I outwardly expressed that I was arguably vulnerable because I'm used to, if you've seen me present and move around the room, I'm quite animated, but I have some slides to be able to direct advisors to. I have points to note within the presentation itself, but it was just me in front of an audience of circa 50 advisors. And yeah, I was proactively informing the audience at that time that that was me being vulnerable without being able to hide or being able to support myself with what I'm very familiar with, being a PowerPoint. And earlier when we were talking about how we can actually identify any characteristics of vulnerability, it's ensuring that you are providing that customer with empathy and support. Ask those open questions, humanize the experience, understand that there are points of signposting that we can support customers with, and across the whole chain of processing the lifetime mortgage application. And if you think about the fact that the customer would immediately be, or initially be talking to family and friends perhaps about considering a lifetime mortgage application, they'll then get in touch with you as the advisor, as if you are the first point of call with that customer when they are considering a lifetime mortgage. You then hand that customer on to the lender and subsequently a valuer. Another couple of touch points for that customer where we can ensure that we are supporting them along the journey. And lastly, through the conveyancing process, that they will have a meeting with their conveyancers too. So ensuring that we are all communicating with one another. And as I mentioned earlier, at Standard Life in Finance, we have got the tech and we've got vulnerable champions across every department that supports your customer and throughout their journey. And do ensure you're informing us. It could be something that you may deem as a potential vulnerability. Please do not hesitate to inform your lenders. And again, this third point here talks about identifying vulnerability. Use those rapport building questions. Observe the body language. And again, this goes back to the differing advice models. Where you may be operating a remote advice service, how will you adapt that process to support any potential trigger points? And with phone interactions, it's crucial to understand the tone of the customer, understanding for any immediate pauses, and being really alert to any phone calls that you're having with that customer at any point during the lifetime mortgage process. I talked about tailored assistance. You may deem as part of your advice process that you may wish to offer extra meetings. You might provide them with additional information, be it video content or a letter for them to review thereafter. Additional resources. I mentioned to you that lenders do have documents and literature available for those that may be visually impaired. And again, we're just here to support by providing individual assistance for customers that require it at any point. And lastly, if there are any requirements for lenders with respect to vulnerability, do inform your customers and ensure that you're documenting that consent too. But if there is any vulnerability being identified, it is important that you share it on so we can all support that customer throughout the entire journey. So in summary here, we understand that every customer is unique and as such, they have to be handled accordingly. It's crucial to remember that vulnerability can be demonstrated in many ways. It could be permanent or temporary, and it absolutely depends on the customer's current and their involving circumstances. Each customer will require different support or services as a result, and at different points throughout the journey of a lifetime mortgage. So just to recap what we provided you today, in short, is the importance to identify and support vulnerable customers, particularly in our industry. And we are dealing with customers of minimum age of 55. I can inform you today that the average age of a customer at Standard Life Home Finance for 2024 was 64. It's creeping down, but the industry is familiar with customers being sort of just under or just over 70 as an average age. Keep a lookout for the guidelines that the FCA provided us with respect to the characteristics and the potential categories that customers may be deemed as vulnerable. whilst respecting again that because a customer may have gone through a life event or may have gone through a health condition, that doesn't necessarily deem that customer as being vulnerable. But it's through asking open questions and building a rapport that you'll be able to dig deeper with your customer and ensure that everyone across the journey is providing the relevant support. And lastly, for best practice, ensure that you are noting the customer's own language when you're discussing any form of vulnerability with them. And in fact, that goes throughout the whole fact find process. Ensure that you're informing the lender that you are due to recommend should they proceed. And of course, through the conveyancing process, when they set up the meeting with their client solicitor, with a customer solicitor too. I appreciate and respect that this is a very short clinic or webinar or overview on vulnerable customers. I'd like to thank you for your attention, and I will pause now. If you have any questions or queries, I'll be happy to field them. I just took myself off share, and I'm pleased to see the audience is still here. Does anyone have any questions or queries, or would you like to call out any potential examples of scenarios that you may have seen?
Sanjay, there's a question in the chat from Noel.
Excellent. Sorry. Thank you, Rachel. Appreciate that. I've just actually seen the chat, so thank you very much. Right, here's a question here. So do you think that advisors are scared to flag up vulnerabilities to lenders because they worry that a lender will somehow view the application differently? No, thank you so much for that question, first and foremost. I think it's quite the opposite, in fact. We are all obliged and we all should be supporting our customers. And apologies, I've only just read that now, but as a lender, we are on hand to support that customer throughout the process. So with respect to how would we view that application differently? Absolutely not. I imagine we would take extra steps to ensure that the customer is being supported throughout that journey, and that's what we do here. So say, for example, and I keep going back to the visually impaired, but we ensure the documents are available. If there are any other forms of vulnerability being identified, yes, as a lender, we may come back to the advisor to ask a few more questions if we feel that it would be something that we require as part of responsible lending. But crucially, we will not treat that application differently. We just want to ensure and support the advisor, in fact, to ensure that we are all doing the right thing to deliver the best customer outcome. I appreciate that question, Noel. That's very relevant. So thank you. Is there any more for any more? Yeah, I'm just reading your follow-up one there, Noel. There is a Tell Us Once initiative whereby advisors are expected to flag up vulnerabilities to appropriate third parties. Do you think it's working? We do absolutely get flagged vulnerability. I think as an industry, we can be doing more. Say, for example, we have had firms, networks, right, in fact, distributors that have come to us where they have met the customer initially, flagged some form of coercion, or the advisor would flag that it just didn't feel right to be able to provide any form of lifetime mortgage lending. So they got in touch with us, and we are actually we've got that banked in our world as well. Therefore, should that advisor crop up, should that customer crop up anywhere else, say from another advisor, for instance, we have the checks in the back end process to be able to ensure that we are flagging that vulnerability. But I do think as an industry, there is more for us to do collectively. I was on a Teams yesterday about a panel discussion that's upcoming at the end of the month, and we were talking about vulnerability as one of the topics we'll be discussing. And I kind of took it back to contextualize it to what the DVLA do in the driving world. So all insurance companies, like driving car insurance companies, share that data. And I'd like to see or think that we as an industry will potentially take a similar approach. And thank you for your question here. What measures do we have in place, or are we working on to share vulnerable information with relevant parties if it's identified post-completion? Say, for example, when the customer is making a request for a drawdown, for instance. Ben, thank you so much for your question too. So we have human touch points whenever a customer comes to us to access their reserve facility. What we do initially is we will review the initial loan and see whether or not the request for the additional borrowing, in this instance, accessing the drawdown, marries with what was discussed at point of advice. If we feel that it doesn't seem fitting based on what they were initially informed, our process is to direct them directly back to their advisor. Or alternatively, we may get in touch with the advisor from the initial loan in the first instance. In addition to this, what we and other lenders do provide our distributors is post-consumer duty. We have information available line by line, customer by customer, to inform you of things such as when has the customer accessed their reserve facility, are they making any voluntary or regular payments, have they redeemed, has someone passed away. So we have that information readily available and we can pass it on. But again, going back to your question there, Ben, I go back to me talking about our vulnerable champions across each department. We have very regular refresher training sessions on vulnerable customers to ensure that me and my colleagues are up to speed and it's at the forefront of our mind. Thank you very much. Appreciate the questions. I'll just pause there to see if anyone has any further questions. Fabulous. Right, I'm going to pause there if you don't mind. And if you're all comfortable with what's been delivered so far, first and foremost, thank you so much for attending. I do hope you found this session useful. Vulnerable customers is very topical. And I keep going back to the fact that crucially with us in our industry based on the demographics that we support. If you'd like to join our next session, I know Jen has kindly put the link in. We're talking about repayments and how that can support you and your customers. Being aware of the impact of total cost of borrowing, for example, or the need of actually carrying out affordability checks with your customers. So do register for that session. You'll have Isaac Allen delivering that one for you. The link's just gone back in there again. And if there are no further questions, I wish you all a positive day and remainder of the week. And thank you once more for attending. Take care.